All right, guess let's get started. Hey, Jamie, Steve, happy Monday.
Hey, thanks, Scott. Hello, everybody. Welcome to Office Hours. Today's November 4th, as you already all know and can see on the screen here. So welcome, everybody. Steve, what is happening?
Hola. Hello. Happy Monday.
Indeed, indeed. Welcome to all-time highs again.
Again.
Um, so real quick here before we get going. By the way, ladies and gents, you might notice a small octave change in my voice. Um, One side of my head's not working. The left side is kind of not working. My ear's useless. So in any case, if you hear me mute for a minute, it's just because I'm trying to save everybody the agony of hearing me cough and sneeze over here. But hopefully it's kind of at bay. I ate my Claritin D about an hour ago, so hopefully it's kicking in now. It's what happens when you get
I took
60
one 5
20.
minutes ago.
It's
What a
what happens
coincidence.
when at night it's 20 degrees and right now it's 86. So they're trying to kill us over here in Texas with the weather.
It's about the
Uh,
same out here.
mm-hmm. Hey, Waleed, Bullseye Trader, Chris, good to see you. Trader's perspective, software perspective. Please don't misconstrue what we share with you as a solicitation to buy or sell anything. If you do need investment advice, please seek out a registered investment advisor. Legally help you out with winning technology that is Trade Ideas Pro. If you haven't been taking anywhere between 400 to 600 people, depending on if it's earnings season or not, but a huge community in there. Traders from every walk of life, from newbie to highly seasoned pros in there, which kind of help Barry out in moderating the room and contributing. And of course, always like to say the best thing other than Barry about the trading room is the price, which it's free. And if you've shopped around for other trading rooms, you know that, if they're even kind of worth their salt, they sure are not going to be free. So we provide that to our users, and you don't even necessarily have to be a subscriber to get in there and see what it's all about. So if you haven't done so already, get in there. Webinars, which you see on the screen here. Of course, you get myself and Steve on Monday. Steve's going to take the helm tomorrow for the trade of the week, and he's going to ride shotgun with him. Wednesday rolls around, we got Dan and Dan MIRKIN and Brad Williams are sharing new technologies coming down the developmental pipeline and putting their own spin on things, always entertaining. Thursday, rounding out the 5 p.m. Eastern webinars with the Trading Studio with Andy, and I ride shotgun with him. And of course, every Friday we switch it up a little bit. Friday support session starts at 11 a.m. Eastern and usually goes anywhere between 2 and 3 hours, depending on the crowd and how rowdy everybody is in there. So it's a great place to get any question regarding TI Pro answered, whether it's simple, basic configuration type items or more advanced back testing, automation, anything's fair game. So keep that in mind for the Friday support session. In addition, we've got the TI University running Monday through Friday, 101 through 401. So it's a great place to, get over the learning curve quicker than later. 101 you'll need to build on top of for 201, so forth and so on. The good thing about these is if you have something like a job or some other thing that keeps you from attending these in a live format, which we always recommend because you can get your questions answered by the instructor at the time. But if you can't make the live, if you do have questions about what you see in the pre-recorded versions, you can always send an email to info@trade-ideas.com and we'll always get back to you each and every week. So take advantage. Always just like to show a little slide here showing how the user base has expanded with the right about the time that we launched the very first AI module back in 2016. So steady growth of user base since that point in time. It'd be interesting to see what 2019 looks like when we're all wrapped up and done here. And also a chart showing Brokerage Plus and how users are using it in live orders and demo orders. So as you can see from the bar chart here, live orders filled in the blue, demo orders filled in the orange, and those numbers tend to be increasing month after month as well. Now, real quick here, just a little blurb about Brokerage Plus and the fact that it is only usable with interactive brokers right now. Little history lesson here. Well, before the big race to zero commissions started up, we went with IB originally because they had the most competitive commission structure. And if you're trading, whether it be manual or automated, Commissions always add up, always the cost of doing business. But we all know what's happened in the interim here. As of about a month ago, everybody is on the no commission bandwagon. It seems, with the exception of IB, we're still kind of waiting on them to see if they're going to go full zero along the lines of Ameritrade and Schwab. But right now, they're kind of taking their time, right? So if you go IB Lite and manually input your trades, it's free. But if you're using the API, which is what Brokerage Plus is tied to, they're still charging a fee. So your guess is as good as ours as to when they might come around, if they ever do or not. But fear not, we are in the process of coding Brokerage Plus up to some of the other flat out zero commission BDs as well. No point in waiting around. So we'll see what happens with that. All right, on to the agenda for the day. Now, of course, everybody knows last week we went ahead and popped on up into all-time highs. So Steve, if you're ready, we can take a look at where the market is right now.
Sure.
And I'll kick it over to you and just take a look at the major indices and what we're doing, what we might be doing, and all that good stuff.
Well, Jamie, there's really no bear case to be made. Test possible entries, meaning it's not a good idea to look up here and say, all right, the market's breaking out. I've got a short-term time horizon, maybe a day or two. I want to grab some profits. I'm going to buy right here today. Nope, you're just asking for it. I just feel like we're ready for, again, some more little consolidation. Maybe not. Maybe we just creep higher a couple more days like this, but the point being is still in play. And if it is, you get some candles like these two right here where the price action bounces off and you've got nice bottoming tails at or touching or above that rising momentum line. So all of this, there's just absolutely no bear case to be made. If you're a short seller and you're thinking, hopefully not, but you're out there thinking of the reasons why the market's going to come to your conclusion and your thesis and fall back, that's just not the way to play it. I mean, your thesis might be right in 6 months, but for right now, the market's not seeing it. The train is leaving the station, so there's just no bear case to be made in that respect. Was that Sean calling for a major crash?
Yeah, there's all major crash. Yeah. Of course, there's always somebody.
Zero Hedge is great for real news, real-time news, but they have been calling for a market crash for 11 years now. So, right, that's what sells tickets and clicks.
It's like the Dr. Doom guy. What's his name again? I forget.
I don't know. They're always going to be right at some point. That's the trick, being a shorty. Markets have cycles, and if you can time it correctly, you'll look like the smartest. Elaine Garzarelli, remember her? She had no business being on TV, and then she got a horrible facelift because she didn't like the way she looked on TV. Before you knew it, she was 3 or 4 years into a bunch of bad calls. The only reason she was on TV is because she nailed the 87 crash, and everybody thought, oh my God, Elaine Garzarelli is the next guru. Let's keep booking her. And slowly she faded away into obscurity where she could never get another single call correct again. So thank you, Chris, for reminding me of that. Yes, you got to pay attention to what the price action is telling us, not what your hypothesis or thesis is about global trade wars or whatnot, what's happening. Great time to buy all of a sudden just a neck snapping gap up that has never really been given back. And so that in hindsight becomes what they call the breakaway gap. So that's the S&P. Nothing really bearish on earth to talk about over there. NASDAQ was one nice bottoming tail. It's just still showing a lot of strength in there. I mean, I'd be a little concerned if it was the upside down and you had the tail on the upside and the body on the downside. That starts to show a little bit of a toppy weakness, but we don't have that. Maybe another couple of days in the chamber, but same thing going on here. Just a beautiful upward sloping 200-day moving average. That's very hard to achieve sometimes. Price action adhering back here to our momentum line. We're getting a lot of space in between there, so a little caution in that respect, but 1, 2, 3, all the moving averages lined up perfectly. I mean, all the stars are aligned, the planets are aligned. You got to ask yourself, if you're short and you're just grinding each day, at what point do you want to throw in the towel? And I might add, you wish you hadn't, because that would be the day it turns, but that's just the way the market gods seem to work. So great looking charts in the NASDAQ. I mean, this one has been on that. And lastly, we have the fun one, going heavily weighting into the small cap stuff. For us is give us a little bit of up to today. We expended a lot of energy getting from here to there in the range. So a nice little pullback and then a push would be really the notice looking at times when we see the rest of the market.
That one, Steve.
Big prolonged. That's all I see over here.
about the compare count readings that I had today, because we all know, do find something, share it with me. With a lot of chop with a move lower at the very end, which, you know, gap ups typically diminish these readings, as always. The bigger the gap, the more kind of water gets thrown onto the fire there. So not the best read today. Did we finish higher? Did we have a big up move at any point in time? Not really. The biggest one was about right here. But sometimes this can give us a real good read, depending on how much room that we have in the market. But when we're up here with nothing to bump our heads against, that doesn't mean we're just going to keep going. Sometimes these can be some of the trickier days to pick direction, whether it's long or short. Now, having said that, it's going to tie nicely into this topic right here, and I'll probably jump around, not go in exact order here, according to what I have on the schedule here. Using paper trading to feel out the market. All right, so let's just take the way that I'm using the compare counts and apply that to paper trading. All right, and in this case, paper trading, an automated strategy. You can see the strategy that I had active. Ooh, okay, yeah, 250 short. Okay, so what was this strategy doing? It's looking for stocks hitting a 250-day high. Now, did I just arrive at 250 days at random? No, I did a lot of back testing, started way down low at like 10, kept ramping it up. And when I saw optimum results, and then I went to 260 and they started backing off, I came to the conclusion, well, I think 250-day highs might have a little magic in them. Okay, so this was originally designed as a short strategy, and I wish I could show you what I had on my blotter right off the bat this morning here, but I had to do a restart of my system. When I brought it back up, my trades had disappeared. So these were the ones that I let run. Let's see here. I think the first trade today was 10:49 my time. Okay, so we were about a little over 2 hours into the market. Now, what I did originally here is I did not run the strategy short. Why not? Because I saw these pretty hefty compare counts to the up. And lies the trick. 60% to the green side. Typically, a lot of the times, that means we're going to have more upside than downside. So initially, what I did, even though this is designed for shorting, I'm like, okay, Jamie, this is paper mode. Feel free to do whatever you want. You know, we're just trying to learn something here. We're trying to get a feel for what's going on in the overall markets. So once again, what I did with the strong compare count readings is I said, you know what? I'm not going to go short. I'm going to go long. Okay. And of course, boom, boom, boom. I think I've got this thing set to take 30 trades because I think that's a good enough sample. Long story short, after about the first hour or so, this thing was loaded up green. And guess what? It wasn't green on the overall P&L. It was considerably red. So right off the bat, you know, 35, 45, an hour into the market, what am I learning from seeing all these long positions not continuing? Okay. There's not any follow through. All these things are backing off. Okay. So anyway, I had the little snafu. So when I pulled it back up, I'm like, okay, now let's just go the way it was designed, short, based on what I had seen in that first little flurry of trades, and them not doing too good at all. Right. So I'm seeing all that information in this capacity, which, unless you're doing something of this nature, there's no way for you to see that type of action. You can hypothesize, but nobody's going to pile into all these trades in real time just to see what happens, right? And you're not going to be able to track them in any other capacity except with a piece of software like this. Now, after I reactivated it, a little over 2 hours into the market on the right side, you can see the equity curve over here, all right? What happened initially? Boom, boom, boom. I think that's the $150 mark, even though this is kind of truncated. There was a position on here that was up or down a whole lot. What was that stock I was telling you about earlier, Steve? It seems like it just disappeared because this was a lot higher. In any case, what was it telling me after that? It's telling me, it's reaffirming the same thing that I saw when I was going long. There's no follow through. So obviously when I'm shorting these things, I got nicely in the money because they were all backing off. And of course, we got back down here to the zero line, little ebb and flow, but we never saw anything just completely run away. Now these This is all after market. At the close, we were right about here. There was another position on here that seems to have disappeared for some strange reason that reported earnings after the market, and that's what caused this equity curve to dip way down. But for the most part, we had a nice little spike to the green and then just a kind of a retracement to the zero line. So in a nutshell, by launching these strategies based on what I think the market's going to do, I'm going to get some pretty quick feedback in that first 1 hour period or an hour and a half, which can help me make better decisions moving forward for the rest of the day. Okay, so I hope that makes sense. If I need to rehash any of that, just throw the questions out there and I'll address them if there are any. But keep in mind, this is just the strategy that I like tinkering around with, that I think can show me market direction along the same lines as a compare account window. So just imagine this. Tomorrow, if I see 60, 65% in my compare account, whether it's green or red, I'm going to do the same experiment. I'm going to launch this thing. I'm going to do what I think, you know, hey, I think it's going to go, I think the market's going to go down because we saw high 65% buys to the downside. And if I see affirmation on this, that's going to help me make better decisions on how I should handle my winners and my losers moving forward based on what the strategy is telling me in real time, even though it's in paper mode. So keep in mind, this is just the one that I like. It's been doing a pretty good job for me, but hey, your options are limitless, all right? So, you know, you never know until you just throw something in there and let it go and start to notice the correlations moving forward. And I think that you're gonna find some interesting stuff there. All right, so that's the thing about using paper mode to try to help us figure out, you know, what might be going on underneath the rug, so to speak, based on market activity. So now we're going to talk about Holly. And if any of you saw the headline on the email that was sent out for the invite to today's webinar, using exit signals as entry signals. And we do a little bit of this when we talk about risk on and risk off, but think about it from this perspective, okay? And let's just talk about Holly for a minute. Holly, what do we have here? Kind of a down day, a little over $1.50 on 100 shares. You know, Grail and Neo kind of zero each other out with a little bit left over. So what are we down? About 160, 170 bucks on 100 shares on a trade count, 27 trades total. All right, between all three modules. Not the best day, not the worst day. As anybody that's been paying attention over the last week has seen some pretty stellar numbers that Holly's been posting. Of course, today with the gap up into all-time highs, kind of a tricky, slippery slope, just kind of a, you know, normal losing day, so to speak. But on a trade count of 27. And we did have some pretty interesting trades in here that we'll talk about here in just a second. And then we're going to get on to using exit signals as entry signals. But first, a couple interesting things here. All right, 27 trades. We can see the point total here. We can see all the trades here. Now, keep in mind, I'm going to pop over here to my options, and I've got it configured just the way we're seeing the data reported over here in the channel bar. 100 shares per trade, which is the way this is reporting, assuming you do 100 shares per trade. All right, so we can see here, Neo, I've got my strategy panel down here pointed to Neo, which only came to the party with 4 strategies today. And we can see Neo finished in risk off on 100 shares of negative 52.50. And watch what happens when we select risk-based stop, or risk-based stop. Now, I'm just going to leave it on 100. We could easily put in 50, 25 bucks, how much you want to risk on a trade. And you've probably heard us talk about this over and over and over again. So before we click on risk-based stop, what I'm going to do here is, you know, obviously we know that there's a little bit of weirdness on just doing 100 shares per trade, because big difference between 100 shares and a $5 stock, or buying 100 shares of Amazon or Google, or a $100 stock or a $50 stock. Probably not the best way to size things. So the second thing, most popular thing that I hear about is people say, well, let's just do a certain dollar amount per trade, because at least we're allocating the same dollar amount per trade and we'll just get as many shares as we can. So if we just put this on $1,000 a trade, then now we can see Neo a little bit more, reasonable way to size trades, is barely positive. Hey, at least it's not losing, right? Now, we're going to pop back over here and go risk-based, just simply meaning that if I'm wrong on stock, right? 100 shares of trade, all of a sudden, we're up 3 points everything and holding it to the close. Did in the most conservative mode and risk off doing 100 shares per pop. But just wanted to take the opportunity to show you guys how big of a difference it makes, just risking a certain amount per trade. If you get stopped out, it's done. Don't have to worry about price or any of that stuff. So obviously we can see here that methodology appears to be the best thus far, risking a certain amount per trade versus dollars per trade or a set share amount per trade. So just keep that in mind. Wanted to share that with you guys because that's pretty eye-opening right there. Okay, so moving right along, using exit signals as entry signals. And what we're going to do here, whether it's this webinar or in Andy's webinar on Thursdays where I show risk on, risk off, we're always just looking at that day. And of course, there might be some good ones, there might not. Typically, there's always one or a few. And then on some days, there's a lot more, just depending on the market action. So we'll take a look at one today. Maybe there's 1 or 2 in there. And then we're going to backtrack. We're going to go look at Friday. We're going to go look at Thursday. And by the time we're done, I think you're going to be able to see what I'm getting at here. But before we start, just a higher overview here. All right. We all know Holly is not magic, okay? She's just using good old-fashioned statistics to bring us statistically weighted plays, right? Now, if you haven't ever used a statistical model before, then you're just looking for your certain chart setup, maybe some other characteristics that you like. But if you ask somebody, well, what are the odds of your trades working from a statistical standpoint? A lot of people would just throw up their hands and go, I don't know, I can track them manually and, do it like that. But before the trade even gets put on, Holly is assigning statistical probability. That's one of the biggest edges that she has, is everything that's being brought to you has statistical weight to it. So for example, in NEO today, and the magic number with this statistical set is, well, winner times in a coin flip. They roll it up, size it up. Now, of course, most people, especially if they're new, the signal comes up and, maybe you can, maybe you have time, maybe they move too fast. Sometimes the statistical probability that this, we all know, sometimes trades take a little bit longer to work. Sometimes they go immediately. But the bottom line is this. With Holly presenting us with 27 trades today, just think about it from this perspective. Okay, what is the nature of a good system? All right, system could be anything. But in this case, obviously, it's Holly and the statistical weight. 27 trades were generated today among all the AI modules out of potentially 8,000 tradable stocks on any given day. So right there, you're getting a lot of noise eliminated, all right? And Steve and myself and Andy, we always say, well, Holly's just another ticker. It's just that, the statistical magic that's taking place behind the scenes is where the edge is, all right? So 27 trades today to analyze. That's not really a heavy load over the day for an individual trader. And we all know sometimes they go right off the bat, sometimes they don't. So let's pick one that kind of just worked. ATKR, not too bad. We had to be patient for a little bit after the entry signal. But as you can see here, boom, 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 worked very nice, all right? Just a smooth uptrend, sticking to that 10-period SMA like it was nobody's business, but not a whole lot of, Holly pretty much got it all there with a timed exit. So, if we got into that one, we had to be patient for about 30 minutes. But the timed exit didn't come till way over here, so not exactly the best exit signal to use as an entry signal in ATKR, right? Well, not the case in AAWW. This is pretty much textbook as to using an exit signal as an entry signal. So here we have the original signal right here with Holly, all right? Now, a couple of things I really like about this trade. Number one, of course, it's earnings season, so we're always going to see a lot of high volume, even though this one didn't necessarily have earnings today. They've already came and gone. which is kind of a good thing. We don't have to worry about earnings impacting the market action, but it did finish with a very healthy relative volume level of 1.82. Now, when we see this buy signal right here, my eyes are automatically drawn over here to this initial high. We're just right on the cusp of this auxiliary pattern playing out right here. And then Holly gets into it, and about 30 minutes later, what does she do? She gets bored with it and closes it out in profit save mode. Now, if you're in this one being patient, great, okay? But if you weren't in this one, and if we're playing the exit signal as entry signal game, sometimes you're gonna pull something up, you're gonna like the initial setup, you're gonna be like, oh, this looks good, everything's lined up, Holly's got the statistical probability for me, I'm hitting it right now, right? But on this one, not necessarily the case. All we have to do is wait, and once again, I've talked about this in webinars before, but it's becoming more and more apparent that this is a viable way to monitor the AI, and it's just waiting for exits to occur. So you see it flash, you see Holly closing out AAWW in profit save mode and flatting the trade as it comes back down here, and she closes it out just about at the worst time on this 15-minute candle here for a flat. Okay, so we've already seen what's happened. We had the signal, we were up a little bit, got this nice break here, and check it out, it's pulling right back to that 10 period, all right? And then a little wick, and then higher and higher. So here we have an opportunity to make an initial entry based on Holly closing the trade out, okay? And then the opportunity to participate in pretty much the largest move of the day. We did get a little action here, we come back down here, Holly closes it out, and when you look at this, I mean, there's a lot of strength in this chart right here on the 15-minute intraday because we popped up, but hey, things take pullbacks. Pull back right to that 10-period moving average, looks nice and calm. Could have even got a better price right here, which guess what? If we can get a better price on a strong chart with Holly, guess what? Our risk is also less because we're getting a better price. And on this one, it would have worked, you know, pretty much like clockwork, with also an opportunity to leverage the position again as we slowly build some steam here, crack that previous high, and just boom, 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 melt on up to the daily highs. And looks like we closed pretty much there at the top. All right, just had some questions coming through there. Just want to make sure. Looks like Steve is.
They're email-related questions, so
okay.
we're good.
Okay.
Yeah.
Okay.
Except, however, though, there was one. Back up a little bit to Brian Leslie as an alternate. How about charting a total market ETF? Did you see that one?
Yeah, as an alternative, how about charting a total market ETF and put it on a 3 to 5 minute chart? I think you mean like some in a compare count format?
I'm not sure what your context was at the time, what you were talking about at the time. No, that's the problem. Sorry.
You know what that reminds me of, Brian, is a full tick, right? The tick on the big board just shows advancers versus decliners, right? Or I mean, total market ETF. I'm assuming that that's what that would be, right? All stocks and all markets. I don't know. Anyway, the beauty about that is you can create whichever one you want. As long as you can locate the list, you can do that. You know,
if you're talking paper trading content.
Yeah.
Yeah.
Mm-hmm. Yeah, exactly. Whether it's a compare count window or a running something in simulated mode. Yeah, good idea. And once again, therein lies the beauty. You come up with an idea, you put it to the test. You either notice something interesting or you don't. You just keep coming up with different things to try. Okay, so that was pretty much the only one that really stuck out today, AAWW. But now what we're going to do is we're going to go back to Friday. So I'm just going to go down here to time frame. We're going to go to the first, which was here. Go here and here. All right, and this one was pretty chock full of interesting things, okay? So first and foremost, this one was just absolutely beautiful. Got to scroll back here. Pardon me for a second. Okay. Matter of fact, I even tweeted this one out in real time on Friday because was I in cross with Holly right off the bat? Nope, I was not. But I saw her flash and I saw, hey, Holly just closed out cross in profit save mode. took a whopping, let's see, did I leave my mode in risk-based? Let me just go back and see here. Okay, I'm still on, $100 risk-based here. So look what Holly did in Crus. She closed it out after, here's the entry bar, 15 minutes. What do we have there? She wasn't even in the trade, right about 17 minutes before she closed it out on profit save of 35 bucks on a $100 risk there. And that was about right here. At which point in time, I'm like, man, look at this nice little consolidation. I like the fact that the sellers, put in that wick there. They tried to take control, but couldn't do it. I think Crus had just reported the day, 2 days before. So we were already out of earnings jeopardy there, not waiting on earnings. And, I tweeted, when we were still below this upper wick here, I'm like, hey, if we get back up to this upper portion here, things could get really interesting because Crus's relative volume at the time was, I forgot what it was, but it was pretty ridiculous, all right? And we got this nice tame consolidation with that bottoming wick. If we get back up to new highs, things could definitely get interesting. And guess what, ladies and gentlemen? They sure did. And, once again, this was on a Holly exit, just sizing up the chart, looked pristine, looked beautiful. We broke that opening range there and just boom, 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 trudged on up about 3 points from there. And you can see holding all the way to the close there, a pretty handsome total, all right? 3 points is 3 points, regardless of what share size you were in. It was a great move. So once again, classic textbook of using an exit signal as your entry signal based on what you've seen happen. And of course, they don't all look like this, but therein lies the shtick, right? It's just like any other window. You might have to, go through 10, 15 symbols before you see one that is lined up. Even though they're all the same, doing the same things, you don't want a big stretched out chart here. We just had a beautiful setup here. So let's take a peek at another one here. Now, this one was just a gorgeous trade. Holly pretty much tagged that first little up move there, and she got out. But maybe you were in this one with Holly, and if you were, great job. When she's exiting, we can make that decision to go with her or stay in and go risk on, in which case you would have been rewarded here additionally. But check it out. We got a move up. Holly's closing it out here. And obviously the buyer, was there. They gapped it up. Buyer was really aggressive in the first 45 minutes to an hour. And then, just like a lot of stocks do, can't just go up, well, they can keep running, but a lot of the times, buyers and sellers are going to become equal and these bars are going to get real tight here. So check it out. As soon as Holly got out right here, we dipped below, took a little breather here. But I mean, look at, once again, what my eyes are drawn to here. Well, once again, volume was crazy on FLR. It had already moved. The target got hit. But guess what? There was more candy on the table. So even if we weren't in this one with Holly and we saw the profit target get hit and we're like, man, look how nice and tight that is. I can make a really low risk entry here. Use the prior 15-minute candle or prior 45 minutes as a low and make an entry here and still get a pretty significant move into the close, even if we didn't take advantage of the first signal that Holly put out, all right? So ingrain this into your head. I don't have to take trades all the time when Holly's taking them, and I will pay attention to every exit that she makes to try to find setups like this. They're there each and every day. Some days there's going to be more, some days they're going to be less. But here is another example, right? TRMB, Holly gets it. She even took a little loss there on a reduced risk because, well, she got a little impatient there. But if this stock is on our radar, all right, because we saw Holly get out of it and take a loss in it, well then, hey, it's not that hard, and a lot of these are real simple to go, okay, Holly brought this to my attention, she took a loss in it. But the bottom line is, she's just like that trader that Steve and I used to take advantage of back in the old days when we all had to go to an office to trade. We see a guy bitching and moaning, they got me out, and then we look at it and go, rubbing our hands together, now's the time to buy. So in this case, a little bit different of a story. Holly brings it to our attention on the exit, and then it's just our job to monitor it moving forward. We could have easily set a price alert right here, not even worried about it, and then later on, hey, it's breaking up to a new daily high on nice tight consolidation, and once again, low risk entry potential right here for a pretty significant move, all based on the fact that you're only aware of it because the AI brought it to your attention. All right, and keep in mind, statistical probability for these things is good for the day. Right, didn't get stopped out, got a little sloppy below the 10 period, but once things got better, then this would have been the opportunistic time to get in on it. Okay, so just once again, you don't have to jump in there, and a lot of the times these Holly exit signals can act as very good entry signals. All right, we got a lot of these to cover, but only a limited amount of time here. Man, we only got 10 minutes left here, so let's just keep on going here. So we had CRUS, FLR from Friday. Now there was one short here, worked out pretty good too. Or was that the, yeah, that was the YMAB here. Oh, okay, it would help, Jamie, if you clicked on the right symbol. I was like, what in the world am I looking for here? What's
going on over there?
Yeah, this isn't the one I was thinking about here. Now, well, this is a good example of one that isn't that attractive, because look at the time here, 12:59. We did have a sell right here. I got this one confused with another one. It's probably on Thursdays. But once again, if I see something like this on an exit right here, once again, does it look like all the others? No, not at all. We got this big wide range bar here. So when I see this exit occurring right here, I don't see anything special there. Now, having said that, it still worked. You had to be patient when this little area right here was broken, but it wouldn't have occurred to me in the range break, because this is the true low. So good example of one that just didn't look that attractive as far as the other ones go. Now QNST, this one was a pretty decent one for pretty much the same reasons as we were talking about earlier. All right, a buy signal right here, makes it all the way through this nice little consolidation area. We got a wick here, tries to take it down. Sellers try to take where near our stop, and then Holly pulls the exit right here. But to me, whether we were in it with her or not, or got that statistical weight, Holly's already in it. We just saw her closing out the position, but check it out. The next candle, we get the biggest move of the day, right? And the only reason this would have been brought to your attention is because you saw Holly closing a trade out. And hey, Holly is great, and we all know the strong suit of Holly are her entries. No, not really that good on exiting, okay? But that's not the important thing, all right? We can use that to our advantage. And clearly, here's another case. We see Holly getting out, and we're thinking to ourselves, boy, this thing's got volume behind it. We've reached this level right here. Could be a good move. And once again, biggest move of the day in QNST based on an exit signal acting as your entry signal. So first and foremost, I just want to see if this is resonating with everybody. If you're not clear about what I'm trying to articulate here, using exit signals as entry signals, by all means, let me know. But hopefully, everybody gets the gist of it here. But if you don't, go ahead and throw the question out there. And while we're waiting, we'll just go ahead and cruise back another day here, and we will go to Thursday, which will have been the last day, actually Halloween. All right, now we got Thursdays up, and BBIO, scrolling on back to Halloween here. Okay, here we go with BBIO. Not a bad entry here. All right, we get into it. What do we, typical, this is typical usually when I see these consolidation areas right here, I would think risk, reduce risk or profit save, but not in this case. Made it the entire time here. But look at this exit candle. Holly calls the buy right here at 20.95. 45 minutes later, right as the magic is starting to happen here, getting out of this little consolidation area, Holly decides to close the trade out. Okay, but just think about it. Say you're not in the trade, you see Holly closing out BBIO. What are you seeing right here? Well, we had a first break here. Holly decides to get into it right here. We get another 45, 30 minutes of consolidation. Volume was also raging on this one during that time period. And then we get this pump right here. Holly closes it out pretty much at the most inopportunistic time, just adhering to a time stop, all right? So this little break had already occurred. Really, it's a great entry signal, and look what happens. You get the biggest move of the day based on an exit signal on a pattern that's already kind of starting to, we got one confirmation here, we got another confirmation here, things are looking good, nice little tight area, adhering to the 10 period all the way. So just keep that in mind. This is information here that we can't necessarily see in any of these columns here, but using exit signals can turn us on to some of the biggest moves of the day that you're not going to see in any of these columns. It's just on the chart here. Look at the first move that Holly had from here to here. All right, and then let's move this line out of the way here. Not bad from here to here, but look at up here. The biggest move of the day would have been brought to you by Holly getting out of the trade. Therefore, we can use exit signals as entry signals, assuming the chart is conducive. It's just kind of like backing into the equation, and from what I can tell, it's starting to become very, very productive. So keep that in mind as you move forward and you interact with Holly. Before we go today, a little time check here. We got about 5 minutes. We did have an interesting short that I forgot to mention earlier in Under Armour today. And in a market that was just, pretty much green all day, but not a whole lot of follow through, I did want to point this one out. So let me just sort this way. So you're like, okay, we got Under Armour, and then we've got Under Armour A class, which same company here, just two different signals here. All right, sometimes this happens. Sometimes you have a stock that does a 2-for-1 split, and instead of splitting the initial float, what they'll do is they'll just issue another common, okay? So the UAA is not the preferred share, but these have voting rights. UA, I believe, does not have voting rights, but in the end, it's all common stock here. Now, for shorts, these performed very well today. We can see UAA, which, yeah, this is the, I can't remember which is the voting, but one of these is the voting shares. But interestingly enough, keep in mind, you will see this again at some point in time from another stock. There are a handful of them out there that have these dual listings. So check this out. UAA, I believe, was UA was the first one, okay? UAA was the second one. We get a nice short signal here. And look at the time that this one broke down on its opening range. Right here at 11 o'clock, UAA goes. So assuming that these guys follow each other, and sometimes you're like, am I pinching myself? Do I really have this much lead time? But UAA broke down initially right here at 11 o'clock Central Standard Time. So you're thinking, well, isn't UA going to follow suit? And look at all the lag time that you had here. This thing was range bound all the way until 12:15. So UAA breaks down and starts heading lower at 11 o'clock Central Standard Time. UA, taking its sweet time, not breaking down until an hour and 15 minutes later out of its range. So man, talk about a nice telegraph and plenty of lead time to, if you're in this one, this would have been a great place to add, or these both would have been respective positions or times to hit these for an initial position. Of course, these were all day holds, so we never saw a timed exit. But even if you weren't in the original one right here on this break on UAA, that was money. And then you had all day waiting for this one to follow suit, which it did, but an hour and 15-minute lag time. So keep that in mind if you see any other repeating symbols as we gyrate through earnings season. That one lined up perfectly today, and he had plenty of lag time to make that short on the second version of UA and UAA today. So lots of interesting stuff going on out there, ladies and gentlemen, but just get in the habit of when you see Holly making exits. Of course, I'm not saying don't pay attention to the original signals, because they can also be very valuable, but there's a lot of alpha being shown to us on exit signals based on the chart and how tight and how smooth they are. They can start acting as really good entry points for you. So keep that in mind moving forward, and it should be an interesting remainder of the week. Looks like we're all caught up on questions. So Scott, if you're ready to walk us out, I believe we're ready for you.
Yeah, sounds good. We've got that test drive coming up starting next week. Make sure you're registered to try out all the premium features and our new stuff. We're going to have paper trading available in it. Just go to trade-ideas.com/test drive, and this time it's a 2-week test drive. So make sure you sign up in advance so that you get the full 2 weeks. We're going to have some special webinars. Trading room will be open, and we look forward to hosting all of you. So sign up. Don't miss out. Trade-ideas.com/test drive. We've got some eBooks out, setup series. Go ahead and get them. Trade-ideas.com/setup. Plug in your email address to get the download link. And both Jamie and Steve contributed chapters to these, so you should check them out. Also include some cloud links to strategies that you can add to your layout. We got a podcast, a new episode out on Friday. You can get all the podcasts by searching for Trade Ideas Podcast wherever you listen to them and adding us as a subscription, and you're ready to pick up the next one. We've got a code good this month, Paper Trade, all caps. It's case sensitive. Use that to save 15% off the first month or year of any subscription. Also usable to do an upgrade from standard to premium. Just log in off our homepage and the link in the upper right and select change account and use that code on your checkout. You can follow Jamie on Twitter at QuantBot. Also follow at Today Trader and at Trade Ideas, facebook.com/TradeIdeasPros, the Facebook URL to follow and like. Info at trade-ideas.com goes to our help desk software. It's the best place to send any questions, so that's where you should send them. We will be sending you an email tomorrow from GoToWebinar with a link to the playlist where you can find the recording. So thanks everyone for attending, and thanks Jamie, thanks Steve.
Thank you, Scott. Steve, thank you very much. Thanks everybody for attending, and we'll see you guys tomorrow.
See you tomorrow.